I'm covering the concept of checklists in this video. I know it's a very simple concept, but it's often quite slept on, and I think there's a lot of use using it in the investment space. The reason I say this is because checklists allow you to prevent missing, prevent your brain from looking at certain factors or avoiding certain factors subconsciously. This has been quite beneficial for me and something I feel that would provide value in the long term, especially as your decisions compound. It's something which I've cloned from Monish Pabrai that he's taken and used. Though he's not released his specific checklist, he actually recommends, and what he did himself was look at the mistakes that great investors have made over the years, and there's some mistakes that you're likely to make yourself if these highly intelligent, highly experienced investors have also made these mistakes. So going and what he's done is gone ahead and looked at the mistakes that Warren Buffett, Charlie Munger have made in their investments, or the investments which haven't turned out so well, and sort of analyse, well, what could have gone better here, and that's sort of what we're after. In terms of mistakes for myself, I guess, and particularly for new investors, this was in my first 2-3 years more specifically, was sort of over focusing on the return and the potential reward, and under appreciating the risk aspect, the downside. Is there anything that sort of limits the downside in terms of valuation? Is there anything in terms of net assets on the balance sheet relative to market cap? Could that limit the downside in any certain sense? Are there fixed contracts that can sort of guarantee income in the future? Anything of that nature is greatly going to diminish the risk and is often underappreciated, in my opinion, particularly amongst new investors. So I think creating a checklist can sort of circumvent some of these human errors that we're prone to. In terms of the checklist itself, I would recommend just going through some famous investors and seeing their investments and what ones did it turn out well. I know just I've sort of given a couple of points there that I've touched on. I think there is one more thing as well, like looking at, I know Monish mentioned that there's businesses that he's lost money to, which have had essentially been highly leveraged, meaning they've had a lot of debt on their balance sheet relative to the assets they hold, and any downturn or any sort of hiccup that comes along the way, which is in business is bound to come at some point, has sort of at some point send the business bankrupt in certain instances. So this is something you need to think about as well. I'd say just be honest and open about your own tendencies. You don't need to share it with anyone, but you can just sort of write it down on your checklist. For me, at the start, it was sort of focusing. I'd done well with some unprofitable companies that had turned around and become profitable as they were in their growth phase, and as a result, I sort of kept going with that, and almost too far where I didn't always take into account the risk as much as I should have. This is obviously something I've reflected on now. Um, is there anything that sort of guarantees it? What is there anything specific that warrants a turnaround, or is it just because the revenue's growing? That doesn't necessarily mean it. There could be legitimate economies of scale, which you've seen other businesses in the past become profitable once they hit this region. You could know that there's some potential profit levers coming into play at a certain point. Perhaps they've acquired a business which was once a massive part of their cost of goods, and now they're able to produce at a much cheaper price as a result, that their gross margins may increase massively. That's an example there. You might be actually the opposite. You might be too conservative. Is there opportunities which you've missed out on because you've seen the stock crashing and you knew it was great value, but you still sort of question the decision? I know that's something I'd done with Meta in the past, where it was, Meta was trading at, I remember $80 a share, $100 a share during that massive crash, and now it's $500 or more. And I think at the time I'd sort of appreciate the fact that it was undervalued. I'd spent an hour doing a write-up on the company, just that alone, never mind the research, and yet I couldn't come. I just basically sucked my thumb on it because I I just at the time I overvalued the risk of competitors such as TikTok, which is, don't get me wrong, still a massive competitor, but I also underappreciate the fact that Meta has had various platforms of similar nature attempt to sort of take over and dominate the market, and Meta's still done well. I mean, even if TikTok took over, 60% of the market, at that valuation, it still would have been a great value. So I think that's something to take into account. I think it's just knowing yourself as well, and just being honest and reflecting on what could you have done better. I think it's something that comes with experience. And I feel like checklists are one of these things where what Charlie Munger's mentioned, where you should have a toolkit of mental models that you should use. And I think checklists sort of come under this framework because checklists, and he sort of mentions across multidisciplinary mental models. And the idea of that is in science, you have the idea of a breaking point. Once something reaches a certain size or a certain temperature or certain threshold, it breaks off, and it could be exponential or quite the opposite. But then you also have like the maths compounding mental model, which is that numbers sort of compound on top of themselves. And I feel like checklists are another one of these where it helps you prevent human error, and the mind is very good at avoiding certain topics that you don't want to that you want to sort of blind yourself from, and it sort of veers you back into being objective and rational about it. I mean, that's why a lot of pilots and they might use checklists, and I know in the financial industry it's used quite a bit, at least in the industry of insurance, when sort of analysing investment decisions. And I think it's something that perhaps investors should take more seriously and can be transferable. That's all on this one today.